Okay, so everybody knows that song, "The Long and Winding Road," and that has been sort of the story that we have with rental housing in Canada. But thank you everyone for joining us on this session today. We've got a couple of great guests on here. They're going to really go through the specifics of new apartment construction and how we make it work in Canada. And we've got to think of today as a precursor to a major event that we're running at Toronto Real Estate Forum on November 28th. We're doing a full day on this topic. So if you want to just take your phone right now and go to the QR code in the bottom left-hand corner, you can scan in and you can see the details of the event. Toronto Real Estate Forum is the largest real estate event in Canada by far. And us together with the promoter Informa are putting on a one-day event. So today's a little bit of a precursor on that, but we'll have probably 20, 25 speakers and a number of panels and presentations on building rental apartments. And what we want to do here today and at the conference is we do not want to be looking back and saying what was the problem, whose fault it is. I mean, there's a lot. You can keep talking about that forever. What we want to teach you guys and work with you on is what is the go forward strategy to build rental apartments in Canada and make good, significant developer profits. Okay, because without significant developer profits, this crisis continues on. And we see a number of things that are occurring right now that are positive steps. And we believe a lot more of those things are going to happen. So let's get ready for what could be, I think, what's probably going to be a real apartment boom. Okay, Rod, next slide. Well, we're going to make a recording available of this to those of you that want it. And if you have a question and we have time at the end, please pop your question in the chat room below if you know how to use that. Also, we're going to pop in Dave. Where are you? Okay, Dave Price is our director of sales. And if any of you want more information or just want to start talking about how do I pivot from what I'm doing right now, you're a developer in all likelihood, how do I pivot to building apartments, and how do I pivot to building affordable rental housing? It's not just affordable rental housing. We need it across the gamut. We keep talking about affordable housing. What we really should be talking about is supply. Okay. So for those of you that don't know us, we're a commercial real estate brokerage firm, a boutique firm that specializes only in the apartment sector. We believe that a good business model for our company is through educating our client and through doing research and feasibility studies for new apartment construction. And over a long-term period, that leads to a very strong relationship between us and the developer. And that ultimately leads to brokerage, which we do, down the road. We probably sold 45 newly constructed apartment buildings in the last 10 years. Okay. So some pretty significant deals, but we meet our clients early in the process when they're thinking of building apartments, and then we work with them through the process. So you can see our agenda here. We've got two great speakers. Okay. Michelle Durand, and Michelle is from M Commercial. And Michelle has offices across the country. And Fran Hohal, our director of research, and Fran heads up the research department. And today, a lot of the work that we're doing is on the affordable housing component and the new things being brought in by by the federal government, the provincial government, and the municipalities. And there's more coming. Okay. And so you've got to stay up. You've got to stay up with it. Okay. I'm not going to talk a lot about politics, but I suspect a lot of you guys like Ronald Reagan, right? If you're a business person, and he talks about how the government doesn't help. And let's even assume for a minute that they are well-meaning, and generally they should be, but they have put so much legislation at the municipal, provincial, and federal level that they have strangled the rental housing industry, and that has resulted in this shortage. Had we had less legislation, we'd be more like Texas, we'd be more like Oklahoma, we'd be, where people build apartments regularly and the rules don't change and the rules are consistent and there are less rules and they build rental housing. Simply said, if a developer can't make a good development return building rental apartments, he's not going to. And people have to sort of get over that it's not a big deal if you're going to fuel a developer's yacht. A developer's in the profit-making business, and it's almost embarrassing that to say something that simple. But when I listen to people talk, it still shocks me that people think that developers should be doing this out of the goodness of their heart and things like that. But we've got ourselves essentially in what I would call a crisis situation. And a rich country like Canada has to solve the crisis. So money will be available, and you can see it starting to come. And the money will be spent. Some will be thrown away, some will be wasted. That's the way governments work. But you might as well understand it and really use what's coming down the pipeline, and it started already, and see how that affects your development pro forma. So you've all seen this stuff in the news, and I think that there has been like way too much talk on defining the problem and blaming the problem on other people. Greedy developers, municipalities that are chaotic and disorganized and things like that. Time to leave it behind. Start looking forward and saying, what's the opportunity here and what do we do? Okay, so big change happened a couple of weeks ago. You probably all know of it. The change in the GST, the PST, HST exemption, depending on the province. It's a 5-year exemption. So let's just start with that, Michelle. Okay, let's start. What is the impact of the fact that the federal government has now removed the HST and the GST? We're going to go to a slide in a minute. I think they did it a little unfairly because the developers who were in the ground 6 months or a year ago may not qualify for it. Okay. And I remember a developer saying to me, I don't want to start construction because I think there could be a goodie coming. Let's call this removal of the HST a goodie. He says, because if I start, I won't get it. And it was said to me a couple of months ago, and here we are with the HST being removed, that may not be applying to someone who's already started. Okay, so if anybody from the government's listening, it should, whatever you do should be retroactive, so you don't penalize the developer who actually started earlier and bonus the guy who started, later on. Like it's kind of like forgiving student loans. So the student who paid off his loan and worked really hard gets nothing, and the student who didn't pay off his loan gets it paid off by the government, right? That's what's happening in the US if you know the story. So Michelle, let's talk about this GST exemption, because it is, I don't know if I can call it a game changer, but I think it is significant. Raj, you go to the slide, and Michelle, you're there?
Yeah. And thanks for that introduction. And I think that it's a step in the right direction. It's one small step, but it's in the right direction. And you had a really good comment there, Derek. You were saying it might not apply to people who have already started. I've read and reread the terms and conditions of that legislation that's proposed, and it's a little ambiguous because it suggests that it's not retroactive. And what I'm hoping they're referring to, and if anybody from the government is listening, is it doesn't apply to people who have paid the self-assessment already. They will not get it back. But it might very well apply to people who have not paid it yet. So the specific wording can be interpreted like that. It's still unclear, but I'm a positive thinker, and I'm suggesting that the non-retroactive part of what they're referring to is if you've paid it already, you're not getting it back.
So, but Michelle, you agree it's terribly unfair to do this, right?
Well, and if you've paid the taxes and it's done and it's over, it is what it is. And it's a small step. I agree. It would be nice to make it retroactive. Yeah. But that ambiguity of all the people that are under construction right now or coming close to ending the construction, it should apply to them. And the wording, depending on how you choose to read it, can be interpreted as that. So we'll leave it up to, the next guys that apply.
Yeah, uncertainty of policy never helps development. Fair enough?
Yeah, it's easy to fix that sentence. It's all in one sentence in that legislation or proposed legislation. But let's go to the example.
Okay, all right. Sorry, go ahead.
Let's show how this can affect whether you go or don't go. So here's this first example is example of 120 units in Ontario being built. This is actually a project that is getting approved right now. So, and the two examples are the same, two projects that are being approved by CMHC right now. So in the first slide, the before, you see the self-assessment in the red circle, which would have been $3.9 million. That $3.9 million has a direct effect, obviously, on the cost. And we see that the equity portion for the borrower to make this work out is $3.6 million, $3,628,000. The blue circle just to the right of that one. So the project dynamics were such that in the MLI program, we were financing 85.7% of his cost. And remember, the effect of modifying the GST or reducing, eliminating the self-assessment does not change the amount of the loan. It only changes the cost of the project. So we have in the just to the left, the after slide, we see that the self-assessment has been removed. And right away, you go to the borrower's equity required. All of a sudden, he doesn't need to put any equity to get the project started. And when you look at the cost that we're supporting, CMHC will then be supporting 93.5% of the cost of the project. The project costs were reduced. The loan amount didn't change. The loan amount is determined by the NOI of the project once completed. So the savings in the GST has a definite effect, where in some cases like this, it actually eliminates any additional equity required. So the builder's even more comfortable moving in quicker to get the project started. If we go to the next slide, we're going to see again similar. This one is 100 units, also in Ontario. Project cost is $36 million. The HST or the self-assessment we see at $3,591,000. The project dynamics were such that in order for him to begin the project, he had $6 million of equity over and above his land equity and over above his deferred costs that would need to be injected. In the end, we were financing in the green circle 73.5% of the total project costs. Now we go to the after slide, we eliminate the self-assessment. Here we see that in the blue circle, the additional equity required has come down by the exact amount of the self-assessment. So he goes from having to inject 6.3 million to only injecting almost 2.8. And the total effect is we're covering almost 80%. 79.2% of the costs are now covered. So does this new proposed legislation make a difference? It makes a heck of a difference for anybody who's looking to move ahead. One of the things that we need to be careful here is Ontario has suggested that it will also eliminate its portion of the self-assessment. Not every province has suggested it'll be doing the same. In fact, some provinces, the one I'm sitting in today in Quebec, has even said they will not be eliminating their portion of the self-assessment.
Right. And Alberta doesn't have a PST, so it's already removed there, right?
Yeah.
And Alberta's probably one of the strongest apartment markets in the country. Okay, so it's important. I don't know if it's enough. If you're kind of sitting on the fence, I think this is enough to tip you to go ahead, Michelle, right?
It's going to make a significant difference, but once again, it's a small step.
Yes.
You know, the self-assessment, and depending which province you're on, makes a nice difference, and it's in the right direction. I don't think it's enough by the government and all the parties that impact what the builders and promoters are going through. But as you can see, it's a positive effect. It's going to allow some projects to move ahead quicker.
Yes. Yeah.
Michelle?
Okay. So let's go to sort of the macro picture right now, right? And I like to think about any problem. You say, what are you certain about and what are you uncertain about? Fair enough. So Michelle, let's talk about uncertainty. Many of us were at the Canadian Apartment Investor Conference. What did you take away from the conference about, like, what are the question marks? Where's the uncertainty? And then Fran, I'm going to ask you to comment on what are we certain about. Fair enough. And let's just do that. Michelle?
Yeah, it's such a good point. We had a wonderful conference a couple of weeks ago where we had wonderful speakers and a lot of people on stage bringing, wonderful information into the market. What I took back from it is that there is complete uncertainty in the market. Where are the rates going in the short term, in the medium term, in the long term?
Interest rates.
How quickly is it going to happen? Everything in the market is now up in the air. So how do you deal with that? And everybody keeps trying to find certainty at this point in time, and there's no way you're going to get it. So it's challenging for everyone, and the best way to get over it is to get educated. Understand why it's uncertain. Understand what happens if the rates go up, if the rates go down, if the rates stay the same, if the market moves in this way, if the market moves that way. The only way you can handle uncertainty, and uncertainty is the theme that we're going to have and be living for the next year at least.
Yeah.
You just
so, Michelle, I just want to summarize. So you're talking about uncertainty of financing costs. Okay. So now, Fran, what are we certain about?
In terms of certainty, well, we've got uncertainty on the policy changes and the interest rates. Uncertainty, just move to the next slide there, Rod. Number one, rental demand is up, no question there. It's not just population growth that's doing that. It's also, we're seeing a desire to rent. People are choosing to rent now. You see strong rent growth, 6% increase year over year. And those rent increases are really a symptom of the problem. They're not the cause of the problem. Countered with that, you also see low vacancy rates. Nationally, I think in Q2 23, we were down at about 2.7%. And we're starting to see the turnover rates that are flattening. Now, counter that with, as we mentioned, the cost of financing. We know that interest rates have gone up by over 30% or more. Pair that with construction costs, they've risen by 50% since 2019, but they are stabilizing, so that's positive. And then we also have this severe labor shortage, not just in the construction phase of this, but also in terms of property management. So that's on the certainty side. But if we kind of pair that with what we're seeing on the US side, you can see here that rents are starting to cool down and vacancies are creeping up a bit because we've had an influx of new inventory. So the US itself has seen one of the biggest rental booms since the 1980s, and we're nowhere near that of our neighbor to the south. So more and more people are choosing to rent instead of buy, and that's also increasing the supply of rent in the US market. So this is future looking if we can get the supply to work.
Next slide.
On the foreign students and immigration, everybody knows that where we're at in terms of immigration and that we're kind of in that really the fastest rate of growth since the baby boom at a 2.9% last year. So that's not just driven by permanent immigration, but it's also driven by temporary residents that are coming into the country through foreign workers or refugees, but also international students. So in this past year, we've seen 1.1 million new immigrants. And over that same period, in terms of non-permanent residents, we're seeing 700,000 more of those. So we're up at about 2.2 million. So the feds, they have a target when it comes to permanent residents, but they don't have a cap on temporary residents, and that's uncapped. So we could see more and more growth there. And everybody's heard about what we need in terms of, to reach affordability. 3.5 million units. But yesterday I heard on the, the close on TV, that they actually, people can't, that's an abstract term, 3.5 million units. What does that mean? They actually put a dollar figure on that. $1 trillion needs to be invested in this sector up until 2030 to get to affordability. 1 trillion is also abstract to me. So I looked up what is Canada's GDP. And last year it was 2 trillion. So you can see the severity of the problem here. And this can't be, fixed with government. Social housing contributes about 4% of our supply. So we're really leaning on the private sector to invest that trillion. And we're not going to get there unless there's some concessions made. There has to be, the private sector has to have some assurancy that they're going to get their returns, or it's not going to happen. So until we deal with that,
so let's look forward, Fran. So let's look forward here, right? Because we know the size, we know the problem, right? It's been over-defined and over-talked about. Let's talk what you can do today first. So the first thing I got of what Fran said is the size of the opportunity is hard to process. So $1 trillion, it's half the Canadian GDP. I can only process up to $3 billion, Fran, because that's how much real estate I've sold in my career, right? In the last 15 years. So I know what $3 billion looks like. But as soon as we start going to $1 trillion, which I think is 1,000 billion, right? It becomes
12 zeros.
it becomes hard to kind of imagine, but the size of the opportunity is monstrous. That's what we're saying, okay?
Yeah.
And what we're saying, treat it like a camera that's not in focus. It's slowly coming into focus. The HST thing brought it into more focus. If they waive development charge or delay them, that brings a little bit more into focus and things like that, right? And so that'd be number one. The greatest threat to the apartment business, this is important what I'm going to say, is not the economy, it's overbuilding. Okay, you can't outsource housing. You see my point? It can't be sent offshore. So if we get overbuilt, and that's what happens in the US, and that's why the rents are going down, the rates are going up, we are a long, long way from being overbuilt, right? And the other part is turnover is very low because people don't have a choice. So you're not, sometimes that's good, sometimes that's bad because you can raise your rents easier on turnover. But so really at the end of the day, land costs are what they are, construction is what it is, operating costs are what they are, what you control is the rent. Fair enough? And that's what's going to make or break you. And rent is driven by location, unit mix, unit size, and your property management platform. Fair enough? And so in these feasibility studies that we do, we help you determine how you maximize your rent and then how you use the various programs to do it. Okay, next slide. And so here would be a great thing that if Canada implemented something like the 1031 exchange program, and this is legislative at the federal level, the Minister of Finance will have to bring this in, but in the US, they have 1031 rollovers. And so there's a model to copy, basically means if a developer builds a building and sells it, whatever profit he makes is not taxed as long as he rolls it over into the next deal. Okay, so in Canada, if you build an apartment building, you make a $10 million profit, you're whacked with a great big tax bill. Fair enough, 20, 30, 40, depending on your situation, 40, half of it could go. Okay, and then you've only got 5 million left to invest. So if we brought in something like a 1031, where you can build it, sell it, as long as you move on to the next deal, you don't pay tax till you sell it again. Okay, and there's nothing wrong with doing that. What you're doing is deferring the tax. You're not eliminating the tax. That would be sort of suggestion number one. Okay, next slide. So there have been reports, and there have been too many reports defining the problem and looking backwards. So what we did is we read these reports. There's a provincial report and a national report, and we pulled out the broad categories of where improvement can happen and where you can take actionable steps, as opposed to theoretical problems telling us we've got, too much or too little immigration or something like that, right? So what we want to do is walk through the parts of the report. We grouped it into really there was 60 recommendations or something like that. We put it into essentially 6 sort of broad categories. And the first broad category was, we need a plan. Okay, well, listen, you're a developer. We're not the federal, provincial, municipal government, but we talked about, what parts of the plan are you going to be watching for and looking for? Okay, and the first thing that we talked about was, choose the municipality that you're going to invest in by how well they're organized. So if you're in Toronto, you're around the GTA, and you got a geographical footprint of 2 hours, there's dozens of municipalities you can build in, right? So choose the municipality that's organized, that's going to welcome you in, and that's going to understand what you're doing and not put roadblocks in front of you, is actually going to accelerate your thing. Michelle, Fran, what do you have to say about that?
Well, Aldous did a study, which I thought was interesting, where they compared the approval rates and the timelines and so on various municipalities.
Right.
And the ones that were, on a national scale, the guys that got you to the approval process the fastest were kind of East Coast or Prairie. So Charlottetown, Saskatoon, Regina, Winnipeg, and Calgary. They scored the highest in terms of approvals. And then there was other ones that gave some government incentives and so on. So look for those at a national level. That was Charlottetown, Moncton, St. John's, and Halifax that had the least amount of government charges. So work with the municipality that has that organized and hire a planner that can get you across the goal line.
Right. Michelle, what do you have to say about just thinking about where you invest?
Where you invest, and taking the time to talk to the people around you. I think sometimes they're going through the motions and going to the municipality and saying, here, I'm applying for my zoning bylaw changes, my official plan changes, or my draft plan approval, site plan approval, instead of asking some of the questions. What can you do to help me out? Sometimes that's all it takes. And because the municipalities are not going to be, the ones jumping at you and saying, oh, you're building this, here's how we can help you. Taking the time to ask your municipality, and before you buy the piece of land, taking the time to go to the municipality and say, what are you guys going to do to help me once I build? I don't think we do that enough. We seem to all follow. So take the time to ask the people around you. Take the time to ask the right questions too.
Right. Okay. So we're going to just keep our answers really short because we got like 6 or 8 things to go through. But on this need a plan, I remember one planning guy said to me, when you come to our municipality, everyone's at the table when you walk in. So we're not making you go to the transportation department, the engineering, they're all at the table when you walk in. You're welcome to come and do business here, right? And that's what municipalities need to understand. Developers not begging to come there. You need them and they need you. Fair enough. And so it's really important that we get the stacking important. Bringing back the MERB program would be a huge improvement, I think, Michelle and Fran. And the MERB program already existed, so we don't need to create it. We just need to dust it off. It was there in the 80s. It provided a lot of rental housing. And then the other one is just stop talking about affordability. Let's talk about supply, right? Because more supply results in affordability. That's what you're seeing happening in America now. Rents are actually going down and vacancies are going up, creating more supply. Okay, so we need a plan. And first part. Next is speed, right? And we're going to dig into this a lot more at our conference on the 28th. And we're going to have municipalities there speaking. But, let's talk about this. Michelle, you go first. That's what municipalities have to sell is speed.
Yeah, municipalities have to sell speed. That's a really good point. And we had the municipalities different municipalities up on stage a couple of weeks ago. And they couldn't figure out how to get the process done quicker. They know it needs to get done quicker. But there's no motivation for them to get it done quicker. As much as the federal government identifies what the problem is and some solutions, the provincial government, the municipal governments, all have to be talking to each other, and they're not talking to each other in any effect.
Okay, shorter. Yeah, we're not bashing on the government. They're already buggered this up. Keep going forward. Fran, what do you think on speed?
I think just some consistency in making zoning bylaws available online. Like there's no consistency there, and making some of those single like provincial wide bylaws in place.
Let's throw out some kudos. Okay, kudos to Edmonton, who I think they now say they'll get approvals done in 4 weeks. Kudos to Calgary for spearheading the office conversion, putting a grant in place, but more importantly, just pulling the industry people together and working with developers as to working against them. Kudos to Shediac, New Brunswick, who says, come on in, we welcome you here, who went ahead and did a study with us to prove the need and said, what do you think developers need? We told them, then they started inviting people in. Michelle, any kudos you can throw out?
Oh yeah, well, I think the biggest one is Calgary, helping office conversions happen. Full stop. That needs to happen across the country. There's plenty of empty office buildings. The municipalities need to turn that around.
Vancouver's doing the same too.
Yeah. I think every city is probably going to have to do an office conversion program, right? Because I'll tell you, an empty office building in your downtown is not pretty for your city. It really looks unattractive. It just attracts the absolutely the wrong thing you want. Okay, good. So again, we want to start thinking about working with cities and cities getting on board, and they have really no choice to get on board given the size of the problem we've got. So what we're saying to all of you in the audience, you are facing headwinds. Some of those headwinds are going to get minimized because they have to. Fair enough? We have to solve this problem. We will solve it. Do we do it efficiently or do we do it inefficiently? We don't know the answer to that, but the private sector is the answer to this. People who think that the public sector and nonprofits can do this are well, they're a very small part of the solution. They're under 5% of the solution.
Yeah.
Why do we keep talking about them? 95% is going to come from private developers, and a lot of that is going to come from small developers who build 10, 20, 30, 40, 50 units. Fair enough? And so on. Okay, let's talk now about zoning. I think we all know that we need provincial standards here, like British Columbia has, for example. But, you know, I remember before we ran into this fog, okay, of COVID and interest rates, everybody wanted shovel-ready sites. Fair enough? Then when we hit the fog, everybody said, no, I don't want a shovel-ready site. I want raw land to bring through the development process and create value that way, right? I wonder now, Michelle and Fran, if we're actually going to switch back to shovel-ready sites where they're more in demand because they're saying, okay, we're ready to build. Any thoughts on that?
They'll definitely become more valuable because you can trigger them a lot faster.
Yeah. Michelle, any comment?
The shovel-ready sites now, with the small steps that are being taken, are becoming more valuable. They've been around for a while. Last year, there's been plenty of shovel-ready sites. Nobody's ready to pull the trigger. Now with the HST, we get to pull the trigger a little bit quicker on some of those sites.
Yep. So maybe land demand will turn a little bit for apartments only, because people can see a light at the end of the tunnel. When they couldn't see a light at the end of the tunnel, they said, don't bring me a shovel-ready site because I'm not ready to pull the trigger. Let me make some money as a land developer. Okay, so that's kind of our thoughts on zoning in general. And then the intensification of apartments is really, really important. But again, it's a long process for people to go through to intensify their sites. There's lots of reasons for you, the developer, to partner with a private owner who owns an apartment building that has density there, whether it's tearing down the building or building another building beside it. Number one, the land is free to the apartment owner. You can vend it in, that can be your equity. Number two, for the existing apartment owner, his old building gets more valuable when you fix up his neighborhood. Okay, so you put amenities in that new building, the old building can use it, those rents can go. People forget to work that into the pro forma, but there certainly is a challenge in working around an existing apartment community and having a construction site at the same time, right? So you've got to take care of your existing people while you're building the new building, and that can create some problems, and you got to be aware of that. But yeah, Fran.
Sorry, the other area that should give some consideration to is like low density assets like suburban retail that already has excess land and so on. So look at converting and intensifying them.
Yes. Good. Okay, let's go on to the next topic. I hope you guys are enjoying this session. Show us a little bit of love in the chat room, right? We do this for free, okay? So that's the least you can do. Okay. All right. Okay. Put a few hearts in there, something like that. You know, that's what my wife does when I do something good. She'll still heart and something. Okay, good. All right, CMHC. I don't know, Michelle, you start off on CMHC.
So I think CMHC is doing what it can. It's so overwhelmed these days, but the good things that CMHC is doing is it's putting together some programs, and some programs that people are less familiar with. The CMHC is helping the municipalities with their challenges. Some of the municipalities that are outside of major metropolitan areas are having difficulties just with their infrastructures. So that when builders say we want to build, some of the municipalities saying, well, we don't have the infrastructure. CMHC is making available monies to support the municipalities so that can go on. CMHC is a program where they're also going to be supporting technologies to help build quicker and build cheaper. Builders today are using the same technology for the last 50 years to build units. There's technologies throughout the world that allow you to build quicker and cheaper. CMHC has identified those and will be bringing them to the markets to allow the builders to take advantage of that. So CMHC is doing what it needs at the same time as being completely overwhelmed on some other markets.
Yeah. You know, we have you know, I want to give a shout out to a guy named Jamie Shipley at CMHC. He really is the best. You know, capable and just says it the way it is. And he's speaking November 28th at our panel. So, you know, I think in a way, kudos to CMHC, but you got to speed it up a little more. You got to hire some more people, and you've got to streamline the process, because that has been holding up a lot of developments. Fran, any comment on CMHC?
Just beware of some of the changes that that they're putting in place in terms of defining an affordable unit. It used to be, you know, you could only charge the maximum of 30% of your median renter income in that market. Now they're putting another kind of layer on that. So they're looking at the per square foot in your comparable market, and you can't be any higher than what they're achieving for a similar kind of unit in your market. So be aware of those changes that are ongoing.
Okay. All right. Okay, good. Okay, let's go on to the next topic. Let's talk about fixed rate financing. Okay, so look, when you come to the apartment business, historically, you came to the apartment business because you wanted stability. Okay, it's not the most exciting business in the world. It's not building a boutique hotel. It's not building whatever it is that's exciting in development. It's a vanilla sort of plain Jane business, right? But you came to the apartment business because you didn't want drama. You wanted predictability, right? So today we've got a lot of the apartment business is quite predictable in terms of its revenue. Its expenses are fairly predictable, but interest rates are not predictable today, right? So when we are putting together joint ventures, okay, the joint venture partner, the equity partner says, Derek, don't tell me how much money I'm going to make. Tell me how much money I'm never going to lose. Everybody follow what I'm saying? So your joint venture partner says, no, don't tell me I'm going to 25% IRR over 5 years, blah, blah, blah. Tell me what I'm not going to lose, okay? And the single largest cost of an apartment building is financing. Fair enough, typically in a new building, operating costs are 30%. Okay, a good chunk of that other 70% is going to be your financing costs, whether it be your takeout financing, mezzanine financing, preferred return you're giving to the investor, or whatever it is. So if you can de-risk financing, even at a cost, I think I could find you more equity money than if you say to me, Derek, we're just rolling with the rates 2 years from now, or whenever we go to take out financing, right? So in putting these partnerships together, and we're talking now to family offices, intergenerational wealth, often it's people we've sold their apartment portfolio for $100 or $200 million, and they're saying, look, we don't want to be in the apartment business anymore with a hammer in our hand or a plunger in our hand, but we want to invest in apartment development because we can get the highest returns. But what they're worried about is the uncertainty. So Michelle, how would you sort of de-risk a deal if you're a developer here looking to raise money, right? And on fixed forward financing?
Yeah, one of the major concerns all the builders have had over the last 12 months with the rising interest rates is, what do? I'm getting into a $50 million build where, you know, I'm going to be financing 45 million of that, but my cost to borrow is going to be increasing during that. How do I mitigate that? Not very many lenders have put together options for that, but some have. And some have, if you're CMHC approved, then they will disperse the full amount of the loan right away, so you can fix your rate and eliminate your interest rate risk during construction, which is a good thing in two ways. First thing, if you're fixing a rate today, you'd be fixing it at around, let's say, 4.9%. While if you were to stay floating, you're at floating prime plus 0, maybe prime minus 10 basis points. That's still 7%. So fixing your rate at 5 is great. The problem is you're now paying interest on the full loan amount, even though you're not using it. The nice thing about this option is you can take the excess amount that you're not using and place it in term deposits and go get 3, 4, 5% to lower your cost of borrowing. So all of a sudden, You've got some options to mitigate your interest rate risk. And you couldn't even think of this 6 months ago. This is something that's happening right now that you have to take into consideration when you're getting involved right now.
Good. Okay. So I can't tell you how important this is for your equity partner. Okay. So if you've got an equity partner that's looking to invest with you, but just let me define equity partner. You want to build an apartment building and you don't have enough equity in the deal, so you're going to bring in someone. So you might have, let's say it's $100 million deal. You might have $80 million of construction financing. You might have $10 million of mezzanine financing to get you to 90%, and you need $10 million. You put in $2 million, your equity partner puts in $8 million. That's what I'm talking about, that $8 million partner. Fair enough. You might structure the deal so that on your $2 million, on the equity partner's $2 million, you each get a 8% preferred return. Fair enough. It's got to be better than what you're going to get money in the bank. 8% cumulative, but it's not paid out till the project is sold or refinanced, right? And so you give this guy a safety first position. If something happens, your $2 million gets lost first, then his $8 million's up at risk, right? But this person is looking for surety of getting the deal built and take out financing. And one of the questions I'm going to ask is, okay, are you a capable developer? Separate story, right? Do you have your construction costs already awarded? The more they're awarded, the safer the deal becomes. You follow? Okay. And then the one way that you can minimize your takeout risk is to do what Michelle just talked about. Okay. And it's important to do that because they're looking for a return of capital first, and then they're looking for their return on capital, right? An equity partner is going to understand the apartment business. Typically, the ones that we're bringing to deals totally understand the business. Fair enough. They just don't want to have the hammer in their hand and the plunger in their hand. And quite frankly, I wonder sometimes the development business has gotten pretty complex, right? A lot of wealthy developers, I think, should become financiers and help finance people who are relatively new to the business. On your first deal, it's hard to find an equity guy. If you built a couple of apartment buildings before and you got a track record and a team, we think we can find you money. So fixed rate financing is an important part of that. Okay, let's go to the next one and talk about innovation. I cringe a little bit here, Michelle and Fran, when people say, let's have the government set up an innovation group. Do you know what I mean? Like, oh my goodness. I have a hard time using those two words in the same sentence, right? But there is lots of innovation out there. I think it's a dumb idea and a bad idea for the government to fund some innovation fund. But, if you make money available to developers and their architects, they'll figure out the innovation.
Yeah, or AI.
Or
You can
AI.
use that as a tool and build something over and over and over again, and just build it faster, quicker, cheaper, etc. So there is some merit to it.
Yeah, but I think that the developer is going to figure that out. One really successful developer I know, he's got a 24-unit building, a 36-unit, and a 78-unit building, and he says I can configure most lot sizes to some or all of those three buildings. Fair enough. Sometimes I build 276s beside each other and so on. But once you figure out this business model, okay, we have a client, Peter Hyde. He's a really good guy. He's mastered a 59-unit building. Fair enough. He knows how to build it. It's cold rolled steel and precast hollow core slab floors, and he can build 59 of them, and he can build one of them, two of them, three of them in a row, depending on the size. And think about the advantage of building, let's call it a 60-unit building, okay? You can get a site lined up for 4 buildings. And you build the first building, you see a little smarter, second building, third building, you can pick up or slow down the speed, depending on your risk tolerance. Now think about having a 250-unit building 240-unit building coming out of the ground, right? It's a major commitment, and it's 1 year, sometimes just to go down to get the garage back up to the ground level. Okay, so sometimes phasing in units, phasing in sites with multi-buildings is a good idea, and it's sort of innovation to de-risk. Michelle, any comments on innovation?
So innovation, like you said, the government is the last one we should be looking at innovation. But one of the things that CMHC did, and I just want to underscore it again, they weren't trying to innovate or finance innovation. They just went out and found those people who actually did it and are bringing it to market. So kudos to them, Jamie Shipley and company. went out and did it right. Fran, you mentioned it, AI is becoming a much more important part of the construction process in general. The builders need to embrace that change instead of being afraid of it. A lot of the older ones are saying, no, that's not how we used to do it, but it's how you do it more efficiently today.
And you can also get your points now on sustainability practices when you're building in your MLI Select. So we have a group of architects and green energy folks at our November 28th forum, and they'll elaborate more on some of those best practices out there.
Okay, great. Okay. I think really the overall message from today's session that I want to give, and Michelle and Fran, you can think about sort of some advice you can give developers who are in the apartment business already, pivoting, or who are just kind of thinking about it, because the majority of buildings are going to get built by people who haven't built an apartment building before. That's how big the opportunity is. There aren't enough apartment developers in Canada to come anywhere near satisfying the future need we've got. So there's going to be a bunch of new guys, new people here in the business. You already know how to construct. Fair enough. We don't teach you that stuff. You already know how to have a hammer in your hand. How do you pivot from what you've done historically, retail, office, hotel, whatever it was, right? Condos. How do you pivot to the apartment business, right? So understanding how to buy a piece of land, get it entitled, put the hole in the ground and build a building, you probably already know. What we're teaching you here is, should you build? What should you build? How much can you charge? What's the depth of the market? And how much money will you make, right? So if you build that pro forma, the one that Michelle showed you earlier, you can immediately now stress test what happened with the GST. Fair enough? Okay. And I guess what I'm saying, that the overall message that I want to give is get ready, because more changes are coming. Okay. And once the changes start, they're going to come more rapidly. So the provinces that are going to eliminate the PST are going to fall in line. The municipalities are going to waive development charges, defer development charges, give you grants, give you land, whatever it is. It's going to start happening. And I'm saying it has to happen, because it's been defined. We've got a crisis. Fair enough. And so there's going to be action coming. Be ready for it. And don't be the last. And some of these government programs, they have limited amount of funding. Like Hamilton had a program for the enterprise zone that was $10 million. And once the 10 million was gone, it was gone. So you had to get in the queue first. And whoever had a shovel-ready site and things like that did it. So it's a little hazy out there, but I think the camera is coming into focus. Fran, what advice would you have developers?
Well, I'll give some self-promotion here. If you're switching, let's say, from condo to apartment or something, you don't know the apartment game, we offer apartment developer university and apartment leasing university. So those are courses that can take you step by step through the process.
I'm going to add.
Thank you. Thank you for doing that.
I think we're seeing the developers starting to pivot, because for 15 years they had it easy. Financing was easy. You wouldn't leave, if any, equity in it, and most of the times you'd actually be putting equity in your pockets at the end of the project. And it took a while. They've slowed down because they couldn't figure out how to take all their money out. They need to learn, and they're starting to remember that leaving money in is okay as long as your return is okay. So we need to show them the good old ways of calculating your return on investment, and that it still makes sense. And we need to remind them that they have to go to the municipalities and ask for their help, ask for tax rebates. For example, there's a project in Chatham. It's going to have a $2 million rebate over the next 10 years in its taxes, and the taxes it pays the municipality. That doesn't change your financing, but it changes your return on your investment. So there's not only one way to find a solution. Make sure you're surrounding yourself with people that are able to provide you all those different solutions. Guys like SVN, like us, like every other good intermediary in the market. So, and November 28th, don't forget, you're going to hear much more of this November 28th.
Yeah. It's coming. It's coming. The other thing that we do, and we've done this now, I think this is our 4th time teaching it. We have the Apartment Development Master Class starting in 2024. This is a course for people, and it's 10 sessions taught online. Basically, you already have 90% of the skills to become an apartment developer, because on the construction, we're teaching you the development side. Okay. And it's designed really for people who are pivoting to the apartment business. It's also a great training tool for your staff. A lot of developers put their children in the program actually because they want them to learn the basics of apartment development. It's our apartment developer masterclass. We've got the slide up there. Tuesday, October 17th, for any that are interested, we think that there are, for equity investors, we think that there are some interesting opportunities for new apartment construction in the US. There's a well-beaten path to successful apartment developers there. And we think that for diversity, it's not really for developers, more for investors, is to make some investments in US apartments. And so on October 17th, we are interviewing a very successful apartment developer who's going to post a project that he's looking for financing for. We've been down to the US a number of times to meet with these developers. We like what they do. We like how they do it. And we think that there's learning opportunity, for developers here to meet US developers and so on. I think that we've got through really everything that we want to do with you today. We thank you for joining us. And, we're going to continue to do these updates on new apartment construction as things change. And I think that there are going to be more changes coming because they have to be coming. And we're finished talking about it. And we're now on the action side of it. And it has to happen at all three levels of government and CMHC. They're doing it. And then now it's a matter of how do you capitalize on that opportunity and so on. Okay, last word, Fran, and the last word, Michelle, we're going to sign off.
See you November 28th.
Yeah, Michelle?
Yeah, looking forward to seeing you on the 28th, but I want to address one question that came up in the box. They were talking about the application of the GST-HST rebate that the government is putting in place. You have to have a nuance. It's not just projects that are starting after the 13th. The government is saying that every project that starts after the 13th qualifies. It doesn't mean that a project underway does not qualify. There's nothing in the wording that says that anybody who is completing a project after the 13th does not qualify. There's nothing that says that. So again, it's unclear, but remember, the odds are going to be really good that anybody who's finishing after the 13th will likely qualify.
Michelle, can I just clarify one thing in your example?
Yeah.
Was that an example with the removal of both the PST and GST or just the GST?
Yeah, we assume both in this example were being removed. So in some cases, you're only going to be removing part of it, and it depends on the province. If you're in Quebec, for example, that's a 15%. It's 5% federal and 10% almost provincial. So the 5% federal is leaving, but the 10% provincial tax is still going to be applied. It has similar effect, just a little bit less.
Yeah.
Okay.
So I mean, when the legislation first came out, I asked Fran to just do a quick analysis and said, if you measure a product just in development yield. So what's your overall development yield? So development yield is defined as NOI over your total cost. Okay. And then for profitability, you look at the spread between your development yield and your exit cap rate. Fair enough. That's a quick and dirty way of looking at it, at a deal. And typically what we were looking for was, let's say 100-point spread between the exit cap rate, which you guess at, and the development yield. That's basically your profit, right? That's the math. Well, by removing the HST, let's call it the federal part of it, okay, that increased your development yield by 200 points. So if it were 5% before, it went up to 5.2. Okay, at a broad level on the model. Yeah, and if you remove the PST, then you had that same kind of. It went to 5.4. Okay, so what I'm saying is, on a quick example, the development yield changed by 0.04. Okay, now that's if that had been normal times, let's say 3 years ago, that would have been significant because you would have had 100 points already, and now you'd move to 140 points. Okay. But today, that spread was much lower. It's less than 100 points, okay? And sometimes it may be even. Your development yield, your cap rate may be the same, right? So now, but it has moved you as much as 400 bips, Fair enough. And that is, I think, significant. And if municipal taxes were waived, right? Then, and look, if you said to me, would you rather they remove development charges or give you a holiday on municipal taxes? It's municipal taxes all day long. Okay, because remember, development charges are a one-time cost added to your construction budget, right? A 20-year tax holiday would be forever, right? And it's something that your lender would recognize and you'd have NOI increase there, right? So the multiple on $1 of development charges abatement versus $1 of municipal taxes is probably a 20 factor or 25 times more valuable, right? On $1 of taxes versus $1 development charges. And I don't know why we always keep lobbying for removal of development charges, right? What we should be lobbying for is a waiver on municipal taxes, and the cities that do that are going to see more new apartment construction happening. Okay, hope you guys enjoyed this, and we'll send you out some information on our November 28th event. Thank you again for joining us. We value your feedback. Thanks, Michelle. Thank you, friend.
Thank you very much.
Thanks,
Bye-bye.
everyone.
Well, everyone.
Well, people can stay on and just chat for a few minutes if you want. We're on Zoom meetings. You can come off Zoom and you can say hello. Dave, you there? Dave Price is the guy to talk to for any of you that want to have a bit of a deeper conversation on apartment development. Okay, close that.
Cheers.
Mary Grace, I see you're here. Nice to see you. Oh, she's left. Hi. Welcome. Let me see. Danielle Merchan. Danielle, we had a beer yesterday. Good to see you. Okay, Prayful, always good to see you, my friend. Okay, great. Okay, all right. Okay, thank you for joining us, and we'll see you. What's our next event, Rod? I've forgotten.
Well,
We've got our apartment download coming up.
Yep.
Right, we've got our
Thursday.
Yeah, next Thursday we got our apartment download coming up. That's just an overall, general overview of the apartment industry, and I'll touch on some of these topics.